Hey everyone, this is Wandering Trader, your low budget, quick take trading nomad. So we are back with another portfolio update, and this is our progress right now. So there was some recovery. This was the squeeze from the Wish news, Wish CEO. So as you know, that's one of my large position. I have 17,500 shares, and I have 1,000 of Baba, and I am starting to build on a QYLD position. Aside from that, I am in Rio de Janeiro right now. We are enjoying ourselves. We are meeting up with friends. We're going out. Life is normal. Everything is fine. We are out about hiking in the favelas, samba nights, just daily activities what locals here would partake in and what some tourists would do. But aside from my travels and my short wandering skits, let's go back to what our trades were up as of last week. All right. So as you saw, I have Wish expiring on the 25th of this month, February. So we are collecting peanuts. I wish I wrote that while the news broke out about the CEO. So that's relatively new. Hood, we wrote this during last week gap down, and we had a strike of 6, and then it recovered. So I think right now it's probably around 14. So we closed this out. So we took max over here. I goofed around over here with Baba. I believe there's a lot of misinformation and conflicting dates about the earnings, and I was under the impression that it was gonna earnings was gonna be released this week, but apparently I believe it's the 16th of February. But anyways, I wrote a monthly on this, so we're collecting 1,110, and we also ended up buying some QYLD as well in the process. So what are our averages right now in Baba? We are averaged at 144 and 22, and our cost basis for Wish is actually relatively high. This one is going to be more of a 2 to 3 year situation, and I have gone in with the intention of holding for 5 to 10 years. So with Baba, we already mentioned 2 to 3 quarters recovery. This is when I took assignment on early November, like mid-November after earnings, macro and sentiments. So this is basically some of the risk back then. So now for which we were waiting CEO, and we are writing monthlies on this, so we'll be able to get the capital pay less. Our tax burden will be less after we get rid of it in the long term, right? So we don't suspend our long-term hold. So I have mentioned how I would be breaking even around 2023. If all goes well by 2022, if it hits around $9-10 2022 this year, I'm gonna cash out, and I'm gonna play something else. If it touches 14, it's gonna be 2023. So by this time, I should be able to lock in around 70 to 90% profit. And at this point, depending on my if I was to divide it out by the time I started holding and entered into this position, I believe it's like 40. It will be anywhere from 40% returns per year. So on here, I believe it should be 14 is my number. But let's take a look at where we are at with the CEO. The announcement was January 1st, so they were very adamant. They met their deadline. Jackie mentioned by February 1st, and it actually happened. Oh, and to all my Asians and people who celebrate Chinese New Year, this is the year of the tiger. Congratulations. And oh, here's a fun index. If you don't know, year of the tiger, this is actually a bull market. So get in your positions and let's ride it out. Let's ride the wave. More on the CEO. So is he a household name? He might be, he might not be. I'm not in the C-suite community, but from his experience, judging by how they're presenting him, CEO of Foot Locker Europe, Middle East, and Africa. So those are pretty large segments. Credited, and usually with international markets, they're quite hesitant when jumping on board to U.S. brands and American companies and stuff like that. So I guess this could be considered a good sign where there is an uphill battle. Foot Locker in Europe, Middle East, Africa, building strong customer focus on channel retail business, increasing sales, profitability, and market share. So he was previously president of Foot Locker Digital. So he has experience with digital, and let's go into where they're moving. So the latest appointments following this year is a new C-suite hire. They're going to do CFO, as well as Chief Technology Officer, Chief Product Officer. So they've reshuffled management, and they have their team in place. So let's see what will happen, and let's see what becomes of them. Let's go back to our portfolio. So we have our option plays locked in, and our positions locked in right now. Oh, so let me go about the reasoning for QYLD before it eludes me. So this is a great chart that I have up here, and this is definitely credit to Financial Samurai Blog and his work. And this is where I felt like the divide between, there's always this push and pull between growth and dividend stocks and stuff like that. So I want to build out a healthy portfolio where I have cash flow and there's less volatility in my portfolio, because I was quite shocked. I gave up my 2020 gains in 2021 in a matter of a month. So I'm reaching that stage where I want some stability. So this is a great chart pertaining to age and needs. But me, I'm actually going over to this part. I'm jumping over here. I'm going to try to build out 50% dividend. So most of it's going to be growth. Most of your appreciation is going to come from growth. But I need this currently because I'm a wandering trader. I'm a trading nomad. I'm going about. I need cash flow. I need to spend money, and I need to enjoy myself. So yeah, growth is important, but we're talking about a healthy, lean fire approach. We're enjoying ourselves. We're not taking things too serious. A new function with Robinhood. We have option watchlist. So this is quite cool. So I have been utilizing this to keep track of my weeklies. So I encourage everyone to play around with this. This is a great function, something to keep on. If you don't know how to use this, I will show you right now. You click on Facebook. You click on, where's the option chain? I haven't used this on the desktop in a while. So let's go on recurring market. So just bear with me while I try to figure it out. Trade Facebook option. So let's write sell puts expiring next week. And we have 220 strike to 17 to 15 so let's do 210, right? So now we just click on the 210, and now we click on add to watch list. So now 210 has been added to watch list. All right, so let's go back to the main, and now here we are. We have 210, 60 per contract. So this is a great function to keep track of everything. For February 1st, for the upcoming week, I am going to be writing Facebook. It got beaten up so badly, I can't believe it. They lost about, I think, like 200 billion maybe in a matter of minutes. 200 billion valuation just got wiped out just like that. Interesting times, that's all I have to say. Interesting times, about 200 billion once earnings was released. So when I thought a large cap like Alibaba, where it can't happen, apparently this is the new norm. Large cap companies that are in the top 10 of the S&P and everything is getting wiped out. 200 billion. I mean, come on, that's more than some countries' GDP. That's no laughing matter. It's just like I'm like shocked. This is like me laughing at because I'm so uncomfortable, like and surprised, like stuff like this isn't even possible. Like the amount of volatility. So that's what I'm saying. I'm building out the QYLD. I want more stability, but these are some of the plays. I'm gonna probably write like three to four contract. I'm leaning towards 3. I'm using some of the margins. So probability of profit is I'm comfortable like around 215 to 12, but we'll see. 220 is also up for grabs. So what I'm gonna do is once I get the premiums, I'm gonna purchase more QYLD. But let's go into the charts. Let's pull up. Let's have an idea of what we're talking about with Facebook, right? Let's have an idea. Let's go to SPY. So the S&P 500, they're long-term oriented. So let's have an idea of where the cost basis is. Let's see Facebook right now. So the vendor's price is 237 right now. This is how much it's trading. So as you see, it's a long-term investment, U.S. location equity. So SPY S&P They have this averaged out at $326.78. The SPY's average is 326. Right. This is where they're at. This is where they're trading. So we're gonna be writing underneath this, okay? So I'm actually, I don't want to sell Facebook, but or Meta, but they're very profitable. They might not be as good as Google. And with the upcoming Google split news, I mean, if you had to choose Google between Google and Facebook, I would say go with Google. But if you want to have more positions and more growth to come, I would say it doesn't hurt to have some Facebook or Meta in your portfolio. I mean, look at the price right now, where it's trading at, where the SPY is, where far smarter people have built this, have analyzed this company. So this is where they're averaged in. This is where it's trading. I'm trying to write underneath around 215. So yeah, let's go on to Wish. No, let's go to the trades for Wish. So we have 225, February 225, that's where we are at. So after that, let's take a look at monthlies. Just have an idea, 34 days out. So my break was 520, so now I'm writing a 5. I'm basically making nothing. But this is one of those situations where I could also start building up and averaging down as well. So that is also in the realm of possibility after collecting my premiums, to average down a little bit and to also build my QYLD. My QYLD is paying out monthly. So right now with 272 shares, I'm averaged around $60 a month. But Wish, I'm gonna have to work something out. I don't want to lose my shares, and I don't want to get caught being put in a bad position. So I'm adamant about writing at 5, maybe 450 depending on the situation. But this is gonna be a hold. We have to wait for earnings. Baba earnings is coming up as well, I believe on the 16th of February. So we have this expiring on March 11th. So this is a monthly over 30 days. And if you are familiar with Data Gang and their philosophy, they are usually around 30 to 45 days out. I wrote at 155. I was comfortable with this number. I didn't want my average in was 149 and my cost base is 144. So I am writing at 155. It might gap up. I might lose the shares, but that's fine at this point. I'm committed in long-term holding, but also I want to find that nice balance between trading and capital appreciation and return of my capital. So this is where I'm comfortable with letting it go. And honestly, if it comes close, and depending on data, if I'm close to expiration and it's pretty close to money, I mean, I reserve the right and I'll roll it up. I'll even roll it up for another monthly. So we're just playing this out. This is our initial test. We have at 155. And we're collecting premiums, and we're also using the premiums to build our position. So we're utilizing everything. So this is essentially it. This is my plan. This is my game plan. Right now, we have lost our form. We have lost our mojo, but we will come back to it. We will come back. We will hit our glory, and it'll happen. We'll come back again. This is one of those trying times. We were almost there. There was some squeeze with the CEO news from Wish, but 50% down on a position, it's there. We have only been holding this for about 5 months. We got in that November and we were averaging down. Right now we're not adding anymore, but we could start averaging soon. Once we see a strong reversal, I'll look into averaging down. Other than that, I am committed on building my QYLD. I'm committed on some of my weeklies and my monthlies and enjoying myself. So thank you again, everyone, for giving me your time and watching my journey, and stay tuned. More travel content, more cheap, low budget travel content, and yeah, take care. Till next time. Bye.